On today's Hashi, I'm discussing housing vacancies and home ownership, a decline in asking rents, mortgage applications, and the ADP employment report. Today is Wednesday, May the 1st, 2024. I am Byron Lazine, and the Hot Sheet starts now. Welcome into the Hashi on a huge day here, May the 1st. It's Jerome Powell Day. He's going to have his press conference this afternoon here over at BAM. We're going to take the time to go through every single word that he says. We'll go through that transcript, both on the video and on the written word. We'll break it down and provide it tomorrow in the Hot Sheet show notes. And of course, here on the show, what are the key takeaways? What are the key takeaways for the economy? What are the key takeaways specifically for housing? How many times will he mention housing? So in that respect, today's a big day because we've got a lot of work this afternoon to get that ready for tomorrow. The markets will be watching. Right now, there's better odds on Wall Street that there will be 0 cuts this year versus the 3 that were floated out just a few months ago. What's his tone going to be around that? He's the one that floated out the 3 rate cuts. He's the reason the market reacted the way that it did. And now that the market believes that that won't be the case, there's been a dip. When I say the market, talking about the stock market, talking about investors. So they're going to be watching closely to what his thoughts are moving forward here now that we're into May. Does he, for the first time in months, float out the R word? I don't know. We've been living in a real estate recession for 2 years now. We get it. We know about the R word. How would the economy react to that? How confident is he that the economy is capable of a soft landing, something that many have thought a lot about? So that's going to be tomorrow when we cover Jerome Powell's press conference. Make sure that you're subscribed here to the channel. Hit the notification bell so you don't miss it. We do this every Thursday morning after an FOMC meeting. These meetings take place about every 45 days. We'll break it all down tomorrow. Also today, 3 o'clock Eastern time, we have a free BAM webinar. This one is something I'm more passionate about than anything in the industry. If you saw the news from Zillow yesterday, they're going to be having consumers sign 7-day non-exclusive contracts on all the homes that they're touring through Zillow. There's a lot of folks that are getting closer to the transaction. Zillow's not hiding this. They've been talking about being closer to the transaction now for years. It's been a mission of theirs. It's a mission of a lot of prop tech companies right now. How do they get closer to the transaction? Which is another way of saying closer to the customer, closer to your clients would be another way that I would put that. So today's webinar is all about how to build lifetime clients, where your clients say, you know what, regardless of the ease that it is for me to search properties or get data on some of the largest real estate portals in the world, I have an agent that I'm loyal to. I have one that here in the community, I respect and have reminders about their service so often, and I'm attached into an ecosystem and a network that they've built that there's no other choice other than going back to my agent. I see it as not a past relationship. I see it as a fluid relationship. That's what the webinar is all about. Myself and Amy Stockberger are going to be talking about how to build a network of clients for life. So there's a link in the live chat here. We'll put it, if you're watching or listening to the replay before 3 p.m. Eastern today, we'll put that available for you to get into that webinar. Amy Stockberger is going to be joining me later on, I think next week or the week after, to go even deeper on this topic with BAM X members. So BAM X members are going to get some access on some real live deep Q&A with Amy on how to build this thing. The webinar today is going to give you kind of the tip of the iceberg of this network that she's built. It's an unbelievable value prop for agents to build into their business. If you're a BAM X member, you're going to get more access to Amy. Use code HOT to get use code LHS, a little teaser. We're using code LHS today at the webinar for people that sign up to BAMX. That'll be your biggest discount of the month. Use code LHS to get the biggest discount right now on BAM X. All right, let's jump into the news for the day here. 24-hour look back on the housing market. This is the only place that does this on the internet. And let's take a look at the quarterly residential vacancies and home ownership for quarter one of 2024. Okay, let's take a look at vacancy rates. These are very interesting. I want to follow these. I want to know about these. I want to know if vacancy rates are going up for a couple of reasons. One, because if they are, and they are, if vacancy rates are going up, Uncle Billy's going to say, hey, vacancy rates are going up. Home prices are about to crash. Well, they're going up from what, Bill? What are they going up for? I have an Uncle Billy too, so I can say this. Uncle Bill, what are they going up to? Or what are they going up from would be the better question. Okay, rental vacancy rate up 6.6%. Homeowner vacancy rate 0.8%. Home ownership rate right now comes in at 65.6. Okay, so homeowner vacancy rate is up almost a point. Rental vacancy rate is up 6.6%. That's huge. And I love the fact that both are up. I love the fact that both are up. I don't, I'm just not even going to be shy about saying it. This is phenomenal news for the housing market, that rental vacancies are up and homeowner vacancy rate is up. People that own a home and it's vacant, nothing's happening with it. This is great news because we're coming off of really historic lows. We're coming off of 20 plus year lows. Okay. Rental vacancy rate just a year ago was at an all-time low, the lowest point in the last 20 plus years. The homeowner vacancy rate, it's never been lower. It's never been lower. So the fact that both of these are moving up tells me we're getting back to a normalized market. Okay, listen, look at the chart in front of you. Are we anywhere near 2008 recession levels on either of these? No. But if rental vacancy up 6.6% from a bottom number, at least it's moving in the right direction. Staying flat means we're staying at the bottom. If it's flat, we're not moving anywhere. Okay, we're like those toys that my kids always throw in the pool. They sink to the bottom and I've got to go get them. Nobody goes and gets, they just sit there on the bottom. We don't want a stagnant market. If we get more inventory, more fluidity to the market, that's a good thing. These numbers going up is a good thing. Somebody says, hey, I see vacancy. I saw a headline, vacancies are up. Yeah, that's great news. Do you want to know why? What have you heard about it? I think it's great news. I can share why. Are you interested? This is great news. The vacancy rate going up on rentals, 6.6%, tells me that rental prices are going to cool. I didn't say drop off a cliff. Investors will argue too that rental prices always go up. Yeah, 10-year run, 5-year run, rental prices are going up. I agree. The gap right now between renting a house and buying a house is so significant because of the affordability issues. But the inventory, the new supply coming in on rentals, and this is mostly impacting apartments, not so much single family yet, but the new supply that's coming out on apartments and then the national vacancy rates up 6.6% are both indicators that prices in the rental market are going to stabilize. That's good news. And I know it's not great news for existing home sales because the lower rents go or the more stabilized those increases and acceleration of rent prices gets, the more people are going to say, well, in comparison to buy, I might just go rent another 12 months. It's so much cheaper than buying. Got it. But it's going to help inflation in a major way. And the sooner we can solve inflation, when we look at the CPI, how much housing is made up and a lot of that is being driven by these rental prices. The sooner we can solve inflation, the sooner we can get to Jerome Powell coming up like he's going to today, this afternoon, and saying we're actually going to cut, as opposed to what he's going to say today, no cut happening. Okay. Rental vacancy rate was not statistically different from the rate in the first quarter. So first quarter, 6.4% of 2023. Virtually the same rate in the fourth quarter, 6.6%. Okay. So it's at 6.6%. It hasn't gone down. We're working at a number that's much higher by the way, than where we were just a couple of years ago. Okay. A couple of years ago, we were down in the 5.5% range. So we're getting to a more normal level. 7% would be very normal. I would argue even over 7% with the amount of supply we've added on inventory, on apartment inventory, that is. That'd be fine with that. I'd be fine with over 7%. Homeowner vacancy rate of 8.8% was virtually the same as the first quarter of 23, as well as last quarter here. So here's the vacancy rates from 2018 to 2022-4. Okay. Homeowner vacancy during the pandemic went up. Now it's been down. I mean, we're basically at the bottom on that. Second quarter last year was 0.7, then 0.8, then 0.9. I'd love for that number to go up. I'd actually love for that number to go up, as opposed to what's happening with home ownership. 65.6%, not statistically different in the first quarter of 23, 66%, so a little bit under. 65.7 in the fourth quarter of 2023 on home ownership. So listen, home ownership rate, you could argue, I'd love to see that. It kind of always sits at a third. Love to see it higher. We'd all love to see it higher. I don't really see any indication, especially with where affordability is, that we get that number higher. Median asking rent for vacant for rent units, that number continues to go up, obviously in the first quarter, but you see it flattening out. Okay, right now you see that number flattening out. That's a good sign. We're going to get into asking rents and where they are specifically right now on the next segment. Median asking sales price for vacant for sale units, that number continues to go up. This might be hey, are you thinking about selling that vacant home? Well, I don't know. I guess if I can get my price, but this might be a chart I send over to them. All of our charts and data and everything gets uploaded to BAMX every single day, so you can grab it there. Look at where prices are right now for these vacant for sale units. They're at an all-time high. Do you want to cash out? The property's vacant. It's only costing you money. One of the ways that we do this here in my business, we use a prop stream. So what homes are vacant right now? What single family homes are vacant in the market? And Haley, if you want to put in we have a BAM link for prop stream that you can get in there and just get this data. Haley will drop it into live chat and then it'll be on the replay as well. So, Kim's talking about here in the comments, absentee homeowners, here I come. Absolutely. Right now, these vacant homes that, they're just, they might miss that opportunity. I think as we get more inventory, prices are going to stabilize even more. It makes sense, right? I think even as rates lower, well, when rates lower, prices will go up. I think in the long run they will, but in the beginning, when interest rates come down, which isn't anytime soon, but in the beginning, I think prices stabilize even more because you're just going to have a lot of people moving around. Some of those homeowners that have been locked in are going to be buying, and you're going to have a lot of inventory come on the market because they're finally going to release their inventory, more options, stabilize prices. I believe that is going to be a short-term impact. All right. So how do you get inventory out of this market? How do you get more people to realize, ooh, if prices are going to stabilize, I might want to cash out now on this current environment with my vacant home. If rent prices are going down, which they are, I'm going to cover that in a minute, and I've got a vacant home, it might be more enticing to sell it. At least you as the agent reaching out and asking the question. We do this by using that prop stream data. There's a BAM link down below. You can check that out. Jennifer asks, how long stabilized do you think? I think there could be a season. I don't know when interest rates go down, Jennifer, obviously. I'm not very bullish. I haven't been bullish all year on that really having any impact on the market this year. But let's say in 2025, somewhere in 2025, the interest rates go down. What could make interest rates go down fast is a break in the labor market, which would lead to a reset. We get all that. Okay. So recession, usually interest rates come down, but avoiding recession, just kind of playing out the string like we are right now. Fed not doing cuts. Maybe the rates come down next year. All right. Rates come down whatever time of year that is. I could see it really a season, meaning a 4, 5, 6 month window, maybe even a little bit longer. It could be prolonged into almost a 12-month run where throughout that time when people are comfortable, like, oh, the rates are at 6, um, or just below, where you get some of that locked up inventory to come onto the market. Now there's more options. There's more options sitting for longer. And I think that could stabilize prices for an extended period of time. You could live in a year where you see, if we're at 6 or we're at 5.9 or something like that, 5.75, I could see a whole year where prices just don't move. They're just stable. And maybe in some markets, even they pull back slightly until we work through some of that locked up inventory that's been locked up for so long. I could certainly see that being the case. And then as rates go even lower, maybe they in the future, we're talking a few years out now, get closer to 5. Then at that point, we start to eat through some of that inventory that gets built up. You could always see prices going up. On the long run, we look at every single decade, prices are certain to go up. If we look at region rental vacancy rates, it's up in the West, it's up in the South, it's down in the Midwest, it's up in the Northeast, and US is up. Okay, so rental vacancy rates up. Some of these homes that are vacant that used to be rents, great opportunity to use a source like PropStream, reach out to them, see if they're thinking about selling. Home ownership rates by region. The West is flat. South is flat. Midwest is down on home ownership. Northeast is flat. And the US is just down 0.4 there. All right. There's your update from census.gov, the US Census Bureau, on vacancies. I want to be looking at vacancies every single quarter. This was a good update. We'll continue to track residential vacancies and home ownership vacancies. I want to be clear, I'm rooting it for it to go up because I want a more normal market. I want a more normal market in inventory. I want a more normal market in flow. I want to stabilize rent prices. I don't want to see rent prices take off. It's certainly not with the last 4 months of data where inflation is starting to pick up again. So these are things I'm rooting for. So anybody says, hey, vacancy rates seem like they're going up. Yeah, it's great news. Here's why. Okay. Asking rents are on the decline. I've been talking about this. I've been hoping that the CPI data would catch up. It hasn't. Realtor.com just released its March 2024 rental report, and it shows a 0.3% annual decline in the asking median rent. If you live in any of these areas where you've seen a lot of apartments come online, you know this to be true that, some people are just going to have to make more concessions. I'm talking Tampa. I'm talking Nashville. I'm talking Austin. I'm talking Dallas. Places where they've built an abundance of apartment, more than they've ever built before, apartment inventory. Okay. March 2024, the U.S. median rent for 0 to 2 bedroom properties across the top 50 metros fell by 0.3%, $5 year over year, marking the 8th consecutive month of a decline. That's the takeaway here. 8 consecutive months, according to Realtor.com, we've had decline in asking rents. Okay. Asking rents then show up in that CPI data 6 months after the lease term, 12 months, where they're like, oh, rents are down, because they have such lagging data. But asking rents are telling me, hey, people are willing to negotiate. There's more inventory out there on the rental market than there's historically been. We've built more units than we've historically been. So rents decline. Nationwide rent is just 2% below the 2022 peak. Okay, so the median rent is not accelerating at the percentages that it's been, but that dollar figure is holding firm. Because it's more of a flattening. This chart right here is what I think will happen with prices as interest rates move down someday and inventory ticks up. I think it's going to be a stabilization. We're going to see those 6-7% gains that we just talked about yesterday with Kay Schiller on home price appreciation go down to 0% gains. This chart is a pre-indicator of what I think is going to happen with prices. Okay. So rents aren't going down. They're just not going up. Okay. They're down slightly off of 0%, but we're talking 0.3%. So they're down a tick for 8 months in a row. This is great news. That you can't have rents going up 10, 12, 15% every single year. It's unsustainable. Okay. This is also widening the gap, obviously, between, who can afford to buy and who's just going to make the decision to rent. It feeds into the, they just want a renter nation. When I look into that theory, it makes a lot of sense. Jerome Powell doesn't care if you rent or buy. The only thing he cares about is getting inflation down to 2%. He would prefer everybody to rent right now because it saved money on their bottom line as opposed to pulling a mortgage. All units saw rent declines. Okay. So studio, 1 bedroom, 2 bedroom, doesn't matter what you're looking at. They all saw a rent decline here in this March report. Okay. Here's the national rents by unit size. Overall, 1,700 plus. Studio, 1,400 plus. One bedroom, 1,600 plus. 2 bedroom, 1,900 plus. Haley, you just got a new apartment, right? What's your rent? 1,650 for Haley. Haley just celebrated her 23rd birthday yesterday. Say happy birthday to Haley, who's producing the show, and say happy. What would you call Bobby's deal today? Bobby's having his wife is having their second child. What'd you have that? Good luck. That's a good luck. Good luck, Bobby. Bobby, many of you guys know, lead producer here at BAM, is with his wife today. Haley's got a birthday yesterday. So Haley, you're 1,650 right now on rent. And what do you got? 1 bedroom or 2 bedroom? 2 bedroom. Oh, look at you. You're below the median rent. You feel you got yourself a deal. You feeling good about that? Haley says she feels great about that. If you were to buy, you got a 2 bedroom. If you were to buy a 2 bedroom, you'd be well above the 1,650 here in this. I know, in this state where you'd be at for that. So you'd be well above that. So that's kind of what's going on in anecdotal evidence there. You guys know that better in your market, obviously. Here are some of your markets. Atlanta, year over year is down 3.7%. Austin, where there's more inventory, down 4.7%. Baltimore's down 1.9. Birmingham's down 2.4. This is all good news. Rents coming down is good news for the fight against inflation. Cheer them down. Okay. I know some of you guys are investors and have rental properties. We want to get the real estate market back to support home ownership. And this is one of the things that supports that. Okay. Boston up 3.3. Chicago's up 4.3. Some of these cities where there's been a lack of inventory, that's the case in Chicago. That's the case in Boston, where, I expect where there's a lack of inventory across the board, some of these prices to pop like it has in those cities. Okay. Chicago, Boston. You see that in Detroit. You see Indianapolis at 3.3. Houston is up 2.3. A lot of inventory there. That one surprises me a little bit. Miami's down 3.6. They've built a lot there. New York, inventory low, 3.8% in the upward direction. Pittsburgh's up 2.8%. Can't imagine there's a ton of new inventory coming online there. San Diego's up 2.9. Everything in the last 12 months in San Diego is up. Tampa, I mentioned Tampa earlier, down 2.5%. I expect that one to go lower. A lot of new multifamily apartment inventory came online in Tampa and continues to come online over the next 12 months. Unfortunately, one thing that continues to be the case every single week that we look at it is mortgage applications to the downside. Mortgage applications decreased 2.3% from last week, according to Mortgage Banker Association. Don't care about that top line number, though. Remember that. We don't care about the number that's in the headlines and the one that I just gave to you. We care about this number, the seasonally adjusted purchase index, because the top line number includes refinances. All right, so we dig deeper. Let's go to the next line. Here it is. Seasonally adjusted purchase index decreased 2% from the week earlier. Okay, so the news continues to come in on the weaker side in relation to demand. Okay, the unadjusted purchase index decreased 1% compared with the previous week. This was 14% lower than the same week 1 year ago. So last year we had low demand, okay, in comparison to the couple of years before, lower demand. Now we're 14% below that. Um, how's the real estate market? How's the real estate market? People ask you that question. Um, I hear agents all the time. Well, it feels crazy. It feels like a lot of people want to buy a house. Well, your feelings aren't being backed up by the stats. Do we all agree there's a lot of people locked into rates that want to make a move when the market dynamics are in line for them to? Yeah, we know that. We know that to be true. When that dam breaks, demand will be there at that moment. But when we look at demand in this selling season, when we look at demand in the next 60, 90 days, it's certainly down. It's certainly near, a very low level. Just look at the existing home sales. They're at a low level for the last 25 years. They're damn near at the lowest. So, we should be up a little bit this year. But demand right now in the current moment, demand long-term, very high. Millennials want to own homes. Boomers still want to own. Everybody wants to own a home. Okay. People want to make moves. There's a lot of pent-up demand. Got it. Okay. But what's happening right now in this market is demand can't afford currently where we're at. That's the truth. Okay. Right now where we're at, there's a certain percentage of people that have to make a move, can afford to make a move, and that demand is lower. It's going to take serving people where they're at. Hey, where are you realistically at? If they're on a 2-year plan, build out a 2-year plan for them. Far too many agents are like, 2-year plan's not aligning with my timeline. Your timeline doesn't matter. The consumer's timeline matters. So what's their timeline? Build out a personalized plan that fits into that. That's the name of the game right now. 2 years, 1 year, 18 months, right? How do you win business? How do you win clients for life? Like we're going to be talking about today. This is another way to win clients for life. Respect their timeline, really understand where their timeline is. Also understand, I was having this conversation yesterday with an agent. He kept talking about, well, this buyer's approved up to this buyer's approved up to that. It means nothing in this market. Approved up to 300,000, 400,000. Doesn't mean anything. What's the payment they're comfortable with? Well, they don't want to go over $2,500 a month. Shop on that. Shop on that. Towns are going to be different. Taxes are going to be different. Home taxes, everything is going to be different. The cost to maintain the house. That's where you can provide, real opportunity for buyers in today's market. All right. So there's your update on the mortgage interest rate. We also have a ADP employment report that just came out. Private sector added 192,000 jobs in April. We have more jobs later in this week, I believe. What do we have? So we have this report. We have weekly unemployment tomorrow. We have another employment report Friday. So a lot of job data coming out, and 2 of the 3 reports coming out after Jerome Powell speaks today. So it'll be interesting there. Will be interesting to see what Jerome Powell says about jobs as a whole. But 192,000 in April. Private employers, the average pace of hiring has accelerated over the past 3 months. So this is, what's the point here? It's coming in hotter than expected on hiring. That's an indication. We don't know what tomorrow and the next day's reports are, but this is an indication that hiring may be hotter than the Fed wants. It's certainly higher than the projected numbers. Hiring was broad-based in April. Only the information sector, telecommunications, media, and information technology showed weakness, posting job losses and the smallest pace of pay gains since August 2021. Here's the change in private employment. So, this number is moving up, not down right now. And so if people got more money to spend, more jobs, easier jobs, that's one of those things that boosts inflation potentially. And it's one of the arguments against a lower rate anytime soon. Logan over at HW consistently says, we're not going to see any significant movement downward in the rates until the job market breaks. Job market could break. We go into a recession, certainly. Job market could break in a meaningful way if residential construction pulls back. I do believe long term, going forward here as existing home sale inventory goes up, that you could see a pullback on housing starts. Right now, all the projections are that housing starts will be up the next couple of years. So I'm kind of just like saying, hey, I think builders are going to take it into things are sitting on market longer, take it into consideration, maybe build a little less. They don't want to get out of their skis. If that happens, that's one of those leading indicators. Oh, people start losing their job in construction. Other industries, a lot of industries support construction, could lose jobs. But what's the data telling us right now? Let's just go back to the facts. They're just, everything is up. Okay. You're seeing the 20 to 49 employee company tick down, but everything else is up significantly. The 500 plus company, the small company, the 50 to 250, the 250 to 500, up, 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 up. Okay, so that's your latest ADP private. We got 2 more jobs reports coming here in the next couple days, and we'll take a look at that. Here's some changes by region. Northeast, up. Midwest, really up. South, up. West, up. Up, 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 up. Everybody's up. West had the smallest increase of the 4 regions. Okay. Another thing that just continues to stay up, but kind of sitting where it's been as of late. Be super interesting this afternoon to watch this number as Jerome Powell is talking. Literally, while he's talking, depending on what he says, this will move up or down. That's the U.S. 10-year Treasury. We've been sitting at 4.641, elevated number here for the better part of the last 30 days. All of April, really, it's been an elevated number since the beginning of April. Anyways, here's the 3-month outlook, right? It's been April where we've seen the significant gains. That's where we've seen an elevation, obviously, in the 30-year fixed as well. 30-year fixed came in a little bit hotter yesterday than on Monday. 7.51 ended the day in the Mortgage News Daily Survey. So we're basically right back up to year-to-date high on the 30-year fixed. Really, I think the 10-year is just going to sit there a little bit stagnant until we see, some commentary from Jerome Powell. Don't really see any Nick T. Wall Street Journal headlines right now. He's usually the one that would leak anything, leading into a Jerome Powell press conference. He's been quiet this morning. All indications are that he's going to come out and say, we're not doing anything with the rate, but it's going to be, what does he comment about what he said earlier? Potentially 3 cuts this year. Is he going to say, I don't expect that? If he says, I don't expect that, look for the markets to drop, look for the 10-year to go up. Right now, the Dow's flat, S&P's flat, NASDAQ's flat. Everything's just like you're looking out at the lake, on a nice July morning. If you go to a lake house or anything, I wish I had a lake house. Who has a lake house? I love a lake house. Invite me to a lake house. All right. You're looking out at the lake, this little steam coming off of the water, and it's just glass. It's just very calm, very calm. But by this afternoon, you could have one of those, one of those party boats going by, and they create waves and mayhem and chaos. That could be the deal by this afternoon. So we'll be looking out for that. What I'll be looking out for is you to join me in Dallas, the end of June 25th to the June 27th. It's the 1,000-watt brand and marketing summit, answering the wake-up call. Be one of the people that's a doer, not a pontificator. This is for agents who want to meet the moment with confidence. Who attends this? Well, myself and Amy Stockberger, who I'll be doing the webinar with today at 3:00, who believes in lifetime clients, who believes in building a brand specifically around lifetime clients. We'll be there along with Eric Simon, the broke agent. But who else attends this? When I went last year, I'm looking in the room like CMO, marketing manager, lead producer, broker owner. It's a real elevated mindset in this room. Be around people who are growing in a way that meets the moment of today. I got to have a great brand. I got to have a great marketing plan. I've got to have a network similar to what Amy's talking about with lifetime clients. These are the things that I believe in long-term. Separate the agent of change. Who's going to be an agent of change right now? The next 10 years is going to be a different era. Separates the agent of change from all the chaos. This is one of the opportunities. Use code BAM to get the lowest price on the 1,000-watt brand and marketing summit in the end of June in Dallas. I'll be looking forward to hanging out with you personally there. I'm going to have a ton of time, by the way, at the event to just kind of kick back and brainstorm. So I hope to see you guys there. All right. 3:00 today, we've got Amy Stockberger, How to Win Clients for Life. It's a free webinar. Make sure you sign up for that. Amy's going to be doing more stuff within BAMX. Use code LHS to get into BAMX if you haven't done so already. A lot going on. Keep training each and every single day. Keep getting better so you can be that agent of change, serve your clients. And I'll see you guys later today, 3:00 on the webinar. Until then, toodaloo.